All right, family, let's go ahead and get into it. So today we were looking at crude oil. I ain't gonna lie, I'm low key irritated right now because I closed a position that I took around 59.35 per barrel. Okay, because we just had all of this consistent buying back up. I was in the trade, for a little over an hour, around an hour, and I just gave up on it because I just felt like it didn't make no sense. I was already down 2 trades on the day. All right, so let's get into it though. Okay, so I hope everybody's in good spirits. Okay, um, let me pick my spirit up. So let's get into it. So this morning, okay, when we dropped our pre, let's go ahead and everybody go to the Black House group right now, okay, in Telegram. And when we dropped our preset narrative, okay, so let's go ahead and let's talk about it. Okay, so we put top of the morning, Black House family. I hope everyone got some good rest and is ready for today. Here on CL, which is crude oil, the 1 hour time frame has currently traded back into a daily demand zone, falling underneath major key level $59.50 per barrel. Sellers were successful and just swept London low, hitting the value area low, almost hitting the next major key level $59 per barrel. Let's be patient this morning for our small window of opportunity. We are not biased just yet. I will drop the narrative once we print more data in the order flow. Okay. So this morning when we got to the computer at 6:07 a.m., all right, what did we notice? Okay, so here we have London, I apologize, Asia open. Okay. Asia was trading above $60 per barrel. The overnight London session dropped, okay, off of a cliff. Okay, look at the CVD. The volume dropped. Okay, price action dropped. Okay, so we were trading around 60.30 to 60.40. We dropped all the way down to $59.20 per barrel. Okay, so what do we notice? So this is what I said when we came in this morning. The a London session dropped the price per barrel underneath major key level $59.50 per barrel. Okay, and we traded back down into this daily demand zone. Also here on the 1 hour time frame, as you can see, we tried to buy price back up. Okay, and we resisted 59.50 as a major key level. Okay, so now New York open. Okay, we swept London low, and now we were trading at the value area low. So right now we're trading at the edge of value. So I was leaning towards being bearish today, right? I was heavily being leaning towards being bearish today. And I'll go and I'll show you why. So here I dropped the video, okay? So this is around 6:10, around 6:10, 6:15 a.m. So as you can see right here in this video that I took in the group, you can see at $59 per barrel, look at all this stacked bids that were here, okay? Look at on the dome levels heat map. Do you see how this bar comes all the way out? Why is that? Because that is how much volume is sitting here at major key level, $59 per barrel, 460 plus contracts, 359. So it's ranging all the way from 58.98, 58.99, $59 per barrel. Okay, these are heavily stacked bids that buyers are looking to lift the offer here from this price point. Okay, and then we also have another huge level of bids here around $59.75. Okay, so as I'll fast forward it, so as you can see, look at 58.75, $58.75 per barrel, we have 388 contracts, 373 contracts. This is huge orders, this is huge volume, this is huge interest in the market, that buyers are heavily bidding to take this market higher. So what I started to develop was, okay, we're already heavily bearish. Okay, we pushed up, we tried to we came back to retest 59.50, we fell off of a cliff. Okay, and now we're slowly buying up. However, but what I noticed, we have internal range liquidity trend line here. We have an internal range liquidity trend that is building. Okay, so when I got to the market, we were trading around the value area low, right? Around $59.17 per barrel. Okay. And then the volume point of control shifted. The volume point of control shifted around 620. Okay, so you can see in this candle, okay, in this shot, the volume point of control was higher. Okay, and then it shifted lower. Why? Because all of this volume started to come in around the 59.25. Okay, around the 59.25s to 59.30s was a lot of volume that started to enter the market. Okay, so let's get into my entry. So I took 3 positions today. Okay, both two positions were stopped. Okay, and my third position is the one that I'm really upset about. Okay, so let me show you my entry on my last position. So as you can see here, we have this support and resistance zone. Okay, we have another support and resistance zone. So this is a small little zone right here from like 59.35 to 59.40, because I believe this is 59.40, because this is a 10. This is 10 ticks to 59.50, which is the major key level. Okay, so we already came up, okay, earlier in New York and retested that. We pushed lower. We came down to the value area low. We pushed back up. We rejected. We pushed down. We pushed up again. We rejected. Okay, I took 2 losses in here. My first 2 losses were in here. Okay, so my last position, what I did was, okay, so when price breaks back underneath this support and resistance level here on the 5-minute time frame at 59.35, okay, as you can see here, so we had 483 contracts. I apologize, 703 contracts on the ask. All right, looking to, and then we swept this 5-minute high. So when price pushed back down underneath 59.35, okay, what I noticed is we had nearly half of the buyers left at around 755. Okay, and then the very next, I had already entered the market. I had market executed, or I put a sell stop. I'm not sure which one. I don't. I think I had a sell stop 59.35 for 7 contracts short. Okay, as you can see here in the very next contract. Okay, the sellers went from 385 on the bid to 1600, like damn near 10x. Okay, so the sellers definitely came in here, and I was like, okay, good. I was happy for that, right? So I entered at the right time. So underneath this support and resistance level, sellers became very aggressive. Okay, and as you can see here, underneath 59.35, okay, price dumped all the way to like 59.05. So we pushed back up into this support and resistance zone. Okay, we push back up into this support and resistance zone. This is where we push back up, so we barely broke underneath the value area low. We pushed back up into the volume point of control. Okay, now remember my thought process. I was already down 2 trades today. Okay, I was already down 2 trades, and the reason I closed this position is because we had 3 major corrections that I just didn't want to risk anymore. Okay, so if we could go to it, and I also want you to know, like when I entered this position at 59.35 is right here, so it would be 750, 755. I entered this position right here at 755 on this candle right here. So let's go ahead and mark it out, right? So 59.35 was right here. Let's go ahead and put it as a let's put that as a major key level support and resistance. Okay, 59.35. I entered right here. My entry was at 755. Okay, we pushed all the way down. My original target was 75. All right, this is my original target, 75. Let's go ahead and put that as our target. Okay, and let's go ahead and draw this out. So let's get rid of that so you guys can understand my thought process, right? So if we have it here, 59.35. Okay, I was looking to hit like 60 ticks. Okay, 60 ticks is what I was looking. The market fell 32 ticks. All right, from our entry, the market dropped 32 ticks in our favor. We had all this huge selling into the market. We fell underneath the value area low. Great signs in our favor. Now remember, I'm already down 2 trades today, so Once market hit 32 ticks, I had broken even on those two trades. So now I'm at break even. However, I did not close this trade. All right, I was still floating that unrealized profit. Okay, so the market dropped 32 ticks in our favor, and then it continued to rise. Okay, we started riding this internal range liquidity trend line. So we pushed back up into the volume point of control. We pushed down. Buyers developed again, as you can see. So we pushed back up. Sellers started to lose a little strength, started to irritate me. We pushed back down. Okay, and then I got happy again once I seen this big red trades indicator. Okay, and then what do we also see here in the session delta? We went from negative 800 to a negative 1100, and then the selling pressure on the bid, the contracts went from 550 to 900 in this candle. I thought we were coming to break this low, which is a good sign. Remember, we're short from 59.35. Okay, buyers develop again, push back up into the volume point of control again. Now you got to understand, this is one correction we pushed up. Okay, so now from 35 to 25, I'm only 10 ticks in profit. That's only 1R. That's not it's a horrible trade. It's only 1-on-1. It's not what we trade for. It's not our system that we trade here. All right, for the Black House Fund. All right, we push back down. We push up again. So this is the second market correction that I held through. All right, let me go to the screenshots. Okay, let me see. Do I have it here? I do. So I had already closed out. So look, we were short from 59.35. We pushed down. We pushed up. This was that support and resistance zone. This is the first correction. We pushed back down. Buyers develop again. We push up for the second correction. I held it once more. We pushed down. All right, and then buyers develop again. Okay, and then at this point we have relatively equal highs. Okay, so I'll go back to the order flow. So right here, as you can see, these two candles right here. Okay, this 810 candle and then this 835 candle, basically relative equal highs. I held it. We pushed down. Okay, now you have to understand, I'm starting to get this trade, I'm starting to get nervous even more and more. Okay, right, I was very relaxed when we had the big drop. I wasn't too nervous on the first correction. Okay, I started to relax even more once we pushed back down. The second correction, okay, I was like, okay, where we going? Now, the third correction, I was just out of it. Remember, I'm already down two trades on the day. All right, so and then we had relatively equal highs, and then this is what really made me close the trade. Okay, once we were breaking, I felt like we were accepting value. I felt like we were trading back into rotation. Okay, so obviously, all right, the edge of value are where the most high probable trades are going to come from. All right, so once we kept trying to break underneath the value area low. Okay, once we kept trying to break underneath the value area low, as you can see right here, we broke underneath it. But we really didn't break underneath it. It wasn't strong conviction. It wasn't a lot of it wasn't much complementary order flow from sellers in our favor. Okay, so obviously the market is trying to find a new value underneath the value area low. Okay, are we accepting this price point? We did not yet accept it. Okay, now obviously we had all of that stacked liquidity. As you can see, 414 bidders who are sitting right here passively looking to take this market higher. This was huge pull. This was a huge pull of buyers. Okay, and once I noticed that we kept failing to break it, we kept failing to break the value area low. I've had trades like this that I've taken in the past where when you see the market consistently trying to break a level and it's not breaking, then just go ahead and exit that trade, because I've lost very big trades trying to long the market when I constantly see, and this was on a different asset pair, this is on gold, but constantly trying to long a market that you see is not going lower can turn out to be very bad, because we can truly just be accumulating to just have a huge bull rally to the upside. And I didn't want to risk that at that point. Remember, I'm already down 2 trades, so I just felt as if this point we had all the stacked liquidity, maybe the market is just not going to drop. Maybe the market is just not going to drop there and grab this liquidity, because we keep trying to find value and accept value lower underneath the value area low, but we keep trading back into rotation. Look how many times we traded back into rotation. This is the first entry. Remember, I held it. As you can see, this was the first correction. I held it past the first correction. We pushed lower. We corrected again. Okay, I held it for this one, and then on the third one, okay, on the third one, I had already closed out. Okay, so now also remember, I'm in this trade at 7:55. So on the third correction, when I closed out, this is 8:55. This is 1 hour later. Okay, and then I noticed we were respecting this internal range liquidity trend line. As you can see, every time we hit this trend line, we bounce up, we push it, and then it's like I noticed like we have big sellers looking to tank this market. All right, huge sellers looking to tank this market. Look, 199, 196 on the bid, 114 on the bid, 57 on the bid, only 3 on the ask, 55 on the bid, only in 0. So nobody was even buying here, but we still pushed up, and we had a very strong negative delta, session delta, and we had a very strong negative delta, but we didn't have any complementary order flow. We pushed up again. So this is the second correction. Okay, so by the third correction, I was just out of it. But look what the market ends up doing. Okay, we pushed up, and then what made me really even close it is because on this candle, okay, we closed at the top of its strength above the volume point of control. All right, now if I mute this, as you can see, the point of control was at the top of this bar. Okay, the point of control was at the top, and we closed above the POC. That just wasn't, that just wasn't good. Those weren't good signs to me at all to be in this trade. So I just took my like 5 to 10 ticks, whatever it was that I got out of. I'm not sure exactly what price point, but I just took my little 5 to 10 ticks, and I just went and decided to call it a day. Because remember, right, our profession is managing the downside cost. Okay, I'm always looking to manage the Black House funds, the downside cost first. This is the only way we're going to stay in the game and continue to grow as a business and to continue to grow as a company in the portfolio, is by protecting that downside cost. I was already down 2 for the day. Now a news article came out right when I closed my position. A news article came out and said crude oil drops to monthly lows. All right, WTI crude oil futures fell more than. Let's open this news article, because when it dropped, I was so irritated. WTI crude oil fell more than 2% to trade below $59 per barrel on Monday, nearing monthly lows, pressured by a firmer dollar, and fresher signs of softer fuel demand. Equity losses and the weaker economic outlook reduced expectations for transport and industrial consumption, weighing on one of oil's main demand pillars. So the market fell, okay, dramatically underneath $59 per barrel, and I was trying to short it all morning but couldn't get it. Okay, the market kept buying up, and then this is where I exited my position right here, and then the market drops all the way to our target. Right, very frustrating, but that's the name of the game. Right, that's the name of the game. Like I said, I was already in this trade for an hour, and then by the time it hit the target at 10:30. So 8:55, 9:55. That's like a 2.5 hours that it took this trade, but it was worth the risk. Right, it was worth it. But I had just closed out. Remember, I was already down 2 trades today, so it was a good lesson, man. Good lesson here in the order flow. Good lesson. So please study this video. Go to the group Black House 500K. Study my entry, study my screenshots. Okay, as you can see, study the entry, study the screenshots. You can see this was actually live here. Okay, study the screenshots. We went short 59.35, gave ourselves a 15 tick stop. We were aiming for that huge pull of passive buyers that were sitting right there at 58.75. Okay, the market ran all the way to there, but we had stopped. I manually closed out once price broke above the volume point of control, and I was just out. I was like, I'm not going to risk anymore for today. All right, so great trade, great trade, great trade. All right, I'm gonna go ahead and leave you with this. Remember, when it comes to our profession, okay, here within Black House Management, our profession is managing the downside cost of printing high side returns of money consistently. All right, through any market conditions done correctly, well, an abundance of fruit awaits us. Godspeed, 500K Trey. We out. Let's get it.